We're coming off a great year in the markets, but now the key question is your portfolio positioned for continued growth? Or perhaps an even better one, did your portfolio actually perform well last year? If you don't know, or you're just unsure, reach out to our friends at Rocklinc Investment Partners. With decades of experience across all market cycles and a long-term track record of success, they share the conservative values and outlook of regular listeners like you. Contact them today for a no-obligation portfolio review at 905-631-5062 or email info@rocklinc.com. That's link with a C, ROCKLINC.com. All right, we're back with more. Our final segment of the Monday, March 23rd. Our good friend Jonathan, CEO of Rocklinc Investment Partners, joins us. And what do you make of days like this? Now, we've had a couple of weeks that have been very rocky in terms of their markets. And now today, the Dow is up 750 points. And let's see, even crypto's having a good day. And oil is having a bad day, down over $10 a barrel to 88.13. And gold also having a bad day. It's down 3.5%, $160. What a day.
Lots of action, and we've got silver's up a little bit, but look, with all of the things going on in the world, it obviously is going to create a lot of volatility, and you're going to have people trading around positions and trying to anticipate what's going to happen. It's, of course, predictable that oil is off, given the fact that they think that the hostilities in Iran might at least be coming to some kind of, not necessarily total end, but at least control over the Strait of Hormuz might be taken over by the U.S. and some of their allies. That's looking more positive, so we can get more good through there, not just oil, but also agricultural products and fertilizers and all sorts of things that go through there. And so that's very big. They're very positive in taking down the price of oil. In terms of gold, is still positive for the year. I think people say they quickly lose perspective. It's trading where it was back in November, and at the end of the year it was around 4,300. Now it's spots around 4,400. So yeah, it had a real shot up there in end of January and early February. But whenever something like that happens and when things go straight up the old hockey stick curve, you got to be careful because there's usually a pullback. It cleans out the excesses and prepares for the longer term. What I would say to people is that the reasons why you want to own gold, none of them have gone away. If anything, they become more intense because the U.S. is going to be even in worse financial position after this in terms of their debts and deficits, and the rest of the world also. And so the longer term trajectory in terms of erosion of fiat currency and its purchasing power is alive and well and getting more intense as the days go on. So be patient, know what you own, don't leverage. Sometimes people get carried away. Don't chase little stocks that you don't understand, and make sure you've got a quality portfolio that can withstand these ups and downs that are inevitably you're going to hit the market.
So you think that some of these precious metals, gold, silver, this might be a buying opportunity as people dump gold in favor of the U.S. dollar? The greenback is strengthening.
Right.
Yeah. And so I guess relative to gold, then gold is down, but could this be a time when people should be keeping an eye and looking for a way to get in? For instance, if you missed the boat on gold in the past and thought, oh, I'm not going to bother with it now, then maybe this is an opportunity for people interested in getting into the precious metal space to start looking for a point at which it's maybe getting oversold. What do you think?
Absolutely. No question about it. If you look at the long-term dynamics for gold, and in particular, if you start looking at the gold companies, I'm talking about the larger significant ones, and the royalty
the Barrick of the world.
Yeah, Agnico Eagle is probably the premier company in terms of quality. And then if you look at some of the royalty companies, which finance a lot of the gold, silver, oil, copper production, like Franco-Nevada or Wheaton Precious Metals, these companies are unbelievably endowed with cash flow right now. Because a lot of the stocks, yeah, they've gone up, but they're not factoring in 4,000 plus gold or $60 to $70 silver. Remember, silver just a year ago was down in the 30s. And so these companies are minting it in terms of their margins. And now that the price of oil is coming off, remember about a quarter of the expenses of a mining company are energy. And so a lot of that would be, for example, oil. that they would use in some of these remote locations. Of course, in Quebec, sometimes you get hydroelectric and a few things. You can have other energy sources. But as energy costs drop, that also helps with the margins on these businesses. So the long and short of it is silver, gold, these are long-term trends because of the debt crisis. And silver, in the case of silver, because of AI, robots, digitization, we need silver. And we've been in a deficit for the last 5 to 6 years. So there's actually a shortage of it. The other big one is copper. I mean, I saw a tweet just this morning on X where Rick Rule, who is very knowledgeable in the whole commodities area, he was just saying this is a great time to start looking at copper. These stocks have dropped literally 40% on average, and yet the price of copper is off maybe 5 or 10%. We get these major moves in the stocks. It provides an opportunity if you are thinking long-term in a disciplined way. You're buying the quality companies and you're not trying to trade in and out of them in a couple of months, but you're taking a 1, 2, 3-year position in some of these businesses. We need them. They're strategic. And as we deglobalize also, as we don't have the same global footprint, then we're going to need some of these resources on the Western Hemisphere. And that also will keep the price up and the demand up, as we're seeing as Trump, again, we create this sort of bipolar world, if you will, which will continue to emerge after we settle things up in Iran.
Yeah, this is where dollar cost averaging makes sense when you get these yo-yo price swings. And if you're putting a certain amount of money into the markets, then when it's down, you're going to do well when it slingshots the other way. Imagine copper is actually up over 2% today.
Yeah, because again, it will trade off of economic growth. So if they think things are settling down in the economy because of the wars maybe getting to the ninth inning, then that will create more stability in the economic environment, and that copper is a good reflection of economic growth. But what I also would say about copper is it is in deficit also, and we need a lot more copper, even just with average growth in the global economy. And copper is, I think, becoming a strategic resource. And there's not a lot of places you can get it. And so that also is one that people can invest in if they look for, again, high quality companies in that space.
Let's talk about the size of government in Canada.
Yeah.
Go back here. So this is a report that is just out now. It measures total government spending, federal and provincial and municipal, as a share of GDP. And it was bloated even probably 5, 6, 7 years ago, but it's only getting worse now. And
Worse and worse.
say governments love hiring because, of course, it makes their job numbers look a lot better than they deserve to. And it's interesting, you compare the way that Canada's job situation is with the United States, and you see these liberal politicians in Canada say, well, we created more jobs than the United States, and we're doing so much better than they are. Yeah, why don't you stick to private sector hiring and see where you stand now? Because they're shedding public sector jobs, which is what you want when you're running $1 trillion deficit. And we are hiring more government people. Yeah, they're talking about cutting now. They're finally talking about shedding 12,000 federal jobs. But for years now, these people have been padding their employment numbers through government hiring, haven't they?
Yeah, and absolutely. When you look at this report out of the Fraser Institute, it says overall in Canada, 43.6% of our GDP is consumed by one of the 3 levels of government. So that's almost 44%. What they don't say is in the 1960s, early 1960s, that was 20%. But Mark, when you look at the provinces, think of the provinces, the lowest is Alberta at 30.4. Then you've got Nova Scotia at 61.2. That's just stacked full of government employees there, civil servants. What are the poorest provinces? The one where the government's the largest spender. What are the richest provinces? Where it's lowest. Alberta, Saskatchewan, Ontario is still better at 43, but that's obviously way too high. And so you in BC at 40%. And what are the provinces that are actually subsidizing the other provinces? It's the ones with the lowest government are subsidizing the provinces with the highest government. And so it's no surprise to us that the larger the government becomes, it squashes the private sector. It takes the resources from where the wealth is actually being created in the private sector, and it squanders it, and it creates economic stagnation and increasingly poverty. And the report also points out that we know this already just from basic economics. 26 to 30% of GDP would be the maximum that you'd want the government to be consuming. And I would argue probably down at 20%. But if you just go with the Fraser Institute, That means that only Alberta is even remotely close to that range. All of the other provinces are way beyond that. So again, public sector is out of control in Canada. It's consuming much too large of the wealth. And unless we are prepared to shrink it, we are not going to have economic growth in this country of any significance.
Yeah, I think the only reason Alberta's even at that level, 30%, is because the federal portion of its expenditures, that's one of the things that has been pushed by the independence movement is that once we shed Canada, we're gonna be able to get rid of our income tax. There won't be an income tax because we'll be able to generate enough revenues through our energy sector that it'll offset government spending by a huge amount. And we're going to be just fine. It'll be terrific, and people are going to be wealthy. But it's such a different mindset between people who all they think about is government. Their whole world revolves around public spending versus, and they don't understand just the basic economics of what they're doing and how their spending and taxing eats into the private sector's capacity to grow. It's a zero-sum game. Either the government grows or the private sector does. And on the public side, in Canada, it has continued to grow and further eclipse the private sector. And what does the private sector do? Jonathan, we all know that. They find other places to do business. They leave. I said, I've had enough of the taxes and of the regulations. I'm out of here.
Absolutely, absolutely. And the thing that which we all know if we've interacted with any of the public operations is they're very inefficient. They're ineffective. They're not accountable to a profit. When you're accountable to a profit, you have to run a business very leanly and you have to be very competitive. You have none of that discipline in the public sector, which means that you get lethargy, you get inefficiency, and the more they hire, the more inefficient they become. If you look at, for example, just CRA, my interaction with CRA over the last 5, 10 years is they're just becoming increasingly inefficient and bureaucratic and costing us more and more money. So again, we see this in the school system. You see it in our hospitals also. The more money they throw at it, the worse they become because the money isn't going in the right places and it's not held accountable to a competitive market and ultimately high returns on invested capital. If you don't do that, if you don't have that discipline in the system, you will absolutely waste the money and squander it. And that's what we see in just spades when it comes to our government spending. It's just out of control.
Yeah, absolutely. You give a job for government to do, you could just take a third of their spending and just throw it in the garbage because it'll be wasted. All you have to do is look at the unbelievable levels of spending in the public sector. Who is lining their pockets? It's just corruption, it's waste, and it doesn't stop with these people.
Just one quick point on that, and as Pierre Poilievre's pointed out also, look at the money we spend on consultants. So we keep hiring, expanding the public sector and continue to hire more and more consultants along the way and line their pockets also, which just, again, breeds the fact that our public sector is not competent.
Yeah.
So yeah, in terms of contacting us at Rocklinc, yeah, info@rocklinc.com. So our website, rocklinc.com. And yeah, I look forward to speaking to anybody who's interested in protecting their capital and growing it prudently. We're disciplined long-term investors and have clients right across the country. Love to hear from you.
Especially when you've got choppy markets like we've had for weeks now. You really value a service like Rocklinc. I know I certainly do. You're not in it on your own. You're not trying to do everything by yourself, thinking that you can outsmart the market because the market will clap back at you. And so just to know that you've got that kind of solid expertise behind you, it's so valuable. And I sleep a lot better as a result of my association with Rocklinc. Thank you so much for coming on the show once again, Jonathan.
Yeah, thank you very much, Marc. You have a great rest of the week and keep the info flowing.
We certainly will do our best. That is Jonathan Wellum, Rocklinc.